China has just made a big move that could concentrate power in one of the world's largest gold markets. I'll explain how as we explore. Effective November the 1st, China has just abolished a long-standing tax incentive on gold sales. This is big news because China is one of the largest gold markets in the world, both per capita and in terms of the market itself. They are concentrating the sales to incentivize individuals, citizens of China, to make decisions based off of taxation. You know, in my view, this is something that really should not be done. I believe in a free market, but of course, in China, there really is not much of a free market. There's a managed sort of a market economy there, but nonetheless, the Communist Chinese Party rules, and of course, they will use taxes to either incentivize or to essentially steer power and to a concentrated focal point, and that is the Shanghai Gold Exchange. Now, my friends at Summit Metals, well, they have gold of various different types and styles, and you can check them out by clicking on the link in the description below. And I like to buy gold in smaller increments these days because the price has gone so high. But nonetheless, usually most states here in the U.S., they don't tax gold if you spend a certain amount of money. But nonetheless, it is, I think, taxation on precious metals is immoral, but that's my viewpoint. Because Article 1, Section 10 of the Constitution says that gold and silver are money. Now, what is happening here? Well, it's been misreported by Bloomberg that the Ministry of Finance announced that retailers will no longer be allowed to offset a value-added tax when selling gold purchased from the Shanghai Gold Exchange. It turned out to not be right. They say that the new rule applies whether the gold is sold directly or processed into other forms, covering investment products like high-purity bars and coins, as well as jewelry and industrial materials. Now, in all actuality, that's not what happened. It was kind of misreported here, but several folks have corrected those errors, especially from folks like Oriental Ghost, who is on ground zero, understands what's going on in China. And essentially what's been happening here is this value-added tax exemption only applies to physical gold bought at the Shanghai Gold Exchange and the Shanghai Futures Exchange. So pretty much exactly the opposite of what was reported by Bloomberg. So what does that mean? Well, it means that commemorative gold is one aspect, according to a source, has been posted. And commemorative gold could be something like this. You know, a commemorative gold coin may not be exempt, or jewelry and other things that are not bought through the Shanghai Gold Exchange. And that is where essentially the concentration of power will be, because it will encourage people to avoid that VAT, that value-added tax, which I'm not quite sure what it is, but it's probably more than 10%, 15%. In many places, it's about 20%, and that would be absolutely crushing if you are trying to buy gold anywhere and you have to pay that amount. And if you're buying gold jewelry, which usually in China, it is pretty high purity for gold jewelry there in China. Usually it's 22 to 24 karat gold. And a lot of people do that as wearable wealth. But nonetheless, now that stuff will be taxed. And that means it'll be concentrating people into buying that gold, at the Shanghai Gold Exchange and selling it back too. Now, there's some nuance in that law. Some versions interpreted as well. Some products will be taxed, but then you'll be refunded later. So I'd be very interested to see how this plays out. Nonetheless, it's fascinating that what's happening here with this announcement from the Ministry of Finance. It's going to be setting up and steering the gold market. If the Shanghai Gold Exchange does see a lot of increased activity and purchases and that means it's going to be a big deal, and we're going to see movement of gold in and out of the exchange, strengthening it. And the Shanghai Gold Exchange has been accumulating more gold as well too. It also could mean that some jewelry could be melted down and sent to the exchange and to put into investment grade bars that would be exempt from taxation. That's kind of what I see happening. because this law will go into effect now until 2027. And so essentially, this means that it uses a levy refund system for physical investment deliveries, which is what I talked about before, and it means direct exchange purchases will be tax-free with the exchange until 2027. And there's also other information that's come out. It's steering consumers towards low-cost exchange trading over premium jewelry, and that will increase the Shanghai Gold Exchange volumes by 20 to 30% based off of prior tax incentive patterns. And this is something that will be a huge, especially given the price of gold now hovering around $4,000 per ounce U.S., and that will strengthen the Shanghai Gold Exchange. And as has been, some thoughts about and some activity leading to setting up yet another exchange with Hong Kong to compete directly with the LBMA. And I think in a sense that's what they're trying to do there. They're trying to strengthen and embolden the Shanghai Gold Exchange and the Shanghai Futures Exchange to compete directly with the London Bullion Market Association. That is in a sense kind of the moving, shifting between East and West, and especially with China being the largest producer of gold and the largest consumer of gold. I think it could send shockwaves across the entire spectrum of the precious metals market in general, but the gold market in particular. And gold is the number one asset class by market cap. There's no other entity that comes close, and China knows this. And so it's fascinating to see this kind of move and this activity, but I feel bad for the people of China because they may not be able to buy these investment grade bars. I don't know what sizes they offer there, and probably some coins too, but my guess is probably they do have multiple different fractional varieties of them. But I'm not really sure. I'm not as in tune with the Chinese market to know what those sizes are. But obviously you're going to be paying lower prices because they're not jewelry. But keep in mind, a lot of the jewelry and a lot of different options out there, they're relatively low premium regardless, I think. It just depends too. But there's a lot of fakes out there too. And we've talked about that in that market too. And of course, some people incentivize using this system, using the SGE to avoid having to deal with fakes that are in some of the largest gold trading areas there in Shanghai and other places, Beijing as well. So this will be very interesting to see how this plays out and what kind of impact it's going to have on the global market. Keep in mind that, you have, differences between prices and gold and especially silver between the East and the West. And this very well could push gold being traded more based off of what's going to be happening there in China, because they want to use the yuan as well to track and trade these purchases. That movement in and out of the SGE and the futures exchange will be done through the yuan. That's what they want. That's what they're aiming for. That's what they're actively pursuing right now. And so they're positioning themselves. Remember, China, they don't think even in terms of just generations. They look beyond lifetimes, even 1,000 years down the road. And so there's that aspect. And gold has been a part of their culture for thousands of years. And so this is interesting indeed. And it's quite interesting to see this development, which will obviously not have an impact immediately. But this is a pretty big deal being discussed a lot out there. So we'll continue to follow this and see what comes from this. And one of the motivations for it is to crack down on illegal market transactions. Funds will flow into the normal market, and this is the only reason for the price soaring. And the market supports the government in cracking down on illegal trading and investing criminal cases. So I think that's part of the motivation too, according to Oriental Ghost. So we'll see. We'll see how this plays out, but it is fascinating to see what's happening there. And gold investment bars have skyrocketed over the past couple of days. He's reporting here. The government released new trade tax policy, and the market understands it's a huge positive news. The world's largest e-commerce site, JD.com, saw a surge in all investment gold bars. And they're soaring as high as 20%. So we're already starting to see the efforts, the outcome of this already. And so keep your ears open, keep your eyes open. What happens in China is extremely important. And this is one of the reasons why I wanted to kind of give you this analysis and this report and this news coming out of China right now. It's very fascinating. Let me know what your thoughts are down in the comment section below. I strive to bring you the latest news and analysis in the world of precious metals. If you enjoy what I do here, I hope you will consider subscribing to the channel. And with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch and to encourage you to please rate, share, comment, and subscribe.